All right, so we're hearing a ton about AI chips lately, right?
Yeah.
And with Nvidia and AMD stock prices going crazy, it's got everyone wondering, is this another tech bubble ready to pop, or are we really looking at the future?
Yeah, it's definitely got that .com era feel to it in a way. But then again, things are different now too.
Exactly.
So it's
It's exciting, but also like, are we getting ahead of ourselves? That's what we're going to deep dive into today. And we've got some really interesting stuff to dig into, from like insane quotes from CEOs to straight up warnings from big investment firms.
Yeah, you've got Nvidia CEO saying demand is insane, which,
Well,
I mean, it kind of is, but is it good insane or is it like bubble insane?
Yeah, exactly.
We're going to break it all down.
Okay, so let's start with the basics.
Yeah.
Why are AI chips suddenly such a big deal? I mean, businesses have always needed computing power.
Well, it's all about AI models, right? They're getting ridiculously powerful, capable of doing things we could only dream of a few years ago.
Okay, so the software is making huge leaps.
Exactly. And to run that software, you need serious hardware. That's where the AI chips come in. They're specifically designed to handle the massive computational demands of these new AI models, way faster and more efficiently than traditional chips.
So it's like the better the AI gets, the more we need these specialized chips, which just creates this huge demand.
Exactly. And that's why you see Nvidia selling out of its latest AI chip for the entire year. When Nvidia CEO Jensen Huang says demand is insane, he's not exaggerating.
Which, on the one hand sounds amazing, like this business is booming.
Right.
But it also makes you wonder.
Right, because could that actually slow things down? If they can't even make enough chips to meet demand, will that stifle innovation?
It's like a bottleneck effect.
Exactly. And then you've got AMD jumping into the ring, too. Their CEO, Lisa Su, is predicting the market for these AI accelerator chips will hit, get this, $500 billion by 2028.
$500 billion.
Yeah, and that's even bigger than the prediction she made last year. So clearly, they're seeing this massive growth trajectory. It's not just hype. Businesses actually want to use AI everywhere. Every industry is trying to figure out how to integrate AI, which means they need the hardware to make it happen.
Okay, so that's the bull case. Huge demand, massive potential. But you mentioned the dot-com bubble earlier, and it's like, how do we know this isn't just another case of everyone getting caught up in the hype?
Well, that's the billion-dollar question, isn't it? And there are some big players who are waving some serious red flags.
Like who?
Elliott Management, for example, they're basically saying, hold on a second, is all this really sustainable?
Yeah.
They're questioning if AI applications are actually as cost-effective as everyone says, and if they'll really deliver on all these promises.
So it's that fear of pouring tons of money into something that might not live up to the hype. Again, that dot-com comparison.
Exactly. And look, AI isn't some magical solution for everything. Just because we can automate something with AI doesn't necessarily mean it's actually a good idea or even profitable, you know?
It's like potential versus reality.
Right, and I think that's what Elliott Management is getting at. They're urging a bit more caution.
So we've got these two very different perspectives. On the one hand, you have this incredible demand and potential, and then on the other hand, you have these concerns about a bubble.
Right, and it can be tough to reconcile those two.
Yeah, how do we even begin to make sense of it all?
Well, sometimes it helps to hear from someone who's seen it all before, someone with a bit of experience. And in the stuff we've been looking at, that voice of experience comes from Larry Ellison, the chairman of Oracle. He's been around the block a few times in the tech world.
Okay, so what does Larry Ellison have to say about all of this?
He's got a really interesting take. He sees this whole AI race as a marathon, not a sprint.
Interesting. So not some flash in the pan,
Yeah.
but a more fundamental shift that's going to play out over time.
Exactly. Ellison argues that AI is going to keep evolving, and the companies that succeed in the long run won't be the ones who dominate today, but the ones who can keep pace with that constant evolution.
So it's not just about this generation of AI chips. It's about which companies are going to control the AI landscape for years to come.
Exactly, and that's a whole other level of competition.
Which brings us back to this question of the AI chip market itself. What I find fascinating is, even if this isn't a bubble that's about to burst, can it even sustain itself in the long run?
Right, like what could shake things up down the line?
Exactly. What if something comes along that completely disrupts the whole AI chip industry as we know it?
It's definitely something to consider, especially with the speed of technological advancement these days.
Yeah, I mean, just look at what happened with Blockbuster Video. They thought they were untouchable, and then streaming came along and changed everything.
What?
But there's some Netflix of AI ships out there that we don't even know about yet.
Exactly. And it could come from anywhere. Quantum computing, for example, that's a total wild card. Imagine if instead of incrementally improving on the AI chips we have now, we're talking about a completely different paradigm for artificial intelligence altogether.
Right. It's like we're trying to predict the future of a technology that's still in its infancy. A technology that's supposed to be capable of doing the same thing.
Yeah, it's pretty mind-boggling when you think about it like that.
It makes you realize that investing in any tech sector, especially one as hot as AI, you got to stay informed, got to stay adaptable, because what seems like a sure thing today could be obsolete tomorrow.
Absolutely. The companies that thrive in the long term won't be the ones resting on their laurels, but those actively researching and anticipating the next big thing.
Okay, so before we get too far ahead of ourselves, though, let's rewind a bit. You mentioned the dot-com bubble earlier, and I think it's worth taking a closer look at that to understand what happened and how it might relate to the AI boom we're seeing today. So back in the late 90s, it was all about the internet, right? Everyone was trying to get in on the action, and internet companies were the darlings of Wall Street. No, absolutely. It was like the Wild West out there. Everyone thought they were going to get rich quick, and a lot of them did, at least for a little while. But then reality set in. The bubble burst.
Yeah, and it wasn't pretty. A lot of those companies were built on hype rather than solid business models. When the hype died down, they went belly up.
So the question is, are we seeing a repeat of that with AI?
Well, the article we were looking at pointed out that the current AI boom has only been going on for a couple of years.
Right.
So it's still early to say for sure if it's directly comparable to the dot-com bubble, which, lasted for about 5 years.
Okay, so there's some key differences in terms of the timeline.
Exactly. Plus, the companies investing in AI now are not those early internet startups. We're talking about tech giants with massive resources and experience.
It's not just some random company throwing together a website and calling themselves a tech giant anymore. These companies, they've weathered storms before.
Exactly. They're in a different league entirely. And when you look at current AI stocks, yeah, they're priced high, but they're not as astronomically inflated as those dot-com stocks were back in the day. So there's some key differences there.
Okay, so that's somewhat reassuring, I guess.
Right, but the article also emphasizes that external factors could still throw a wrench in things.
Like what kind of external factors?
A global recession, some unforeseen geopolitical event, anything that throws the entire market into a tailspin. That could definitely impact even the most promising sectors, including AI. So there's a lot to be optimistic about, but it's not a guaranteed win.
Right, it's like they always say, past performance is not necessarily indicative of future results.
Exactly. Things could get bumpy.
Okay, so we've talked about the potential, the risks, the historical parallels. But here's what I keep coming back to. Even if this current wave of AI hype levels out, even if things don't completely crash and burn, what about the long game? Can this AI chip market really sustain itself indefinitely?
You're asking the right questions.
Because what if there's some other technological leap coming down the pipeline, something that we can't even imagine yet, that completely disrupts the whole AI chip industry as we know it?
You're thinking long-term, I like it. And honestly, that's where things get really interesting. But before we dive into all that, let's take a closer look at that dot-com comparison.
Okay. Sounds good.
Right. So like we were saying, everyone was going crazy for internet companies back then, just like they're going crazy for AI now.
Yeah. Pouring money into everything.
And valuations were through the roof. But a lot of those dot-com companies, they didn't really have anything to back it up.
It was all built on hype.
Exactly. And when the hype died down, reality set in, a lot of those companies, they just disappeared.
Gone. So are we headed for the same thing with AI?
Well, the thing is, it's still early days.
Right.
I mean, compared to the dot-com bubble, which lasted for like 5 years,
right,
this AI boom, it's only been a couple of years.
Sure.
So it's kind of hard to say if it's the same thing just yet.
Okay, so the timeline is different.
Exactly. Plus, the companies that are investing in AI now are like the big dogs,
Yeah.
These are established tech giants with tons of resources, not like those early internet startups.
Right. These guys have been around the block.
Exactly. They've seen it all. And when you look at the numbers, yeah, AI stocks are priced high, but they're not as crazy inflated as those dot-com stocks were back in the day. So there are some key differences there.
Okay, so that's a little reassuring.
Right. Like, it's not a perfect comparison, but even with all that said, there are still external factors that could shake things up.
Like what?
Oh, the classic stuff, a global recession, some crazy geopolitical event, anything that throws the whole market out of whack.
Right.
Even AI, which seems pretty unstoppable right now, it could still get caught in the crossfire. So yeah, there's a lot of potential, but it's not a guaranteed home run.
It's like you said, past performance is not necessarily indicative of future results.
Mm.
Okay, so we've talked about the potential of AI, the risks of a bubble, and how the dot-com bubble might be similar and different. But you know what I'm really curious about? Even if this current wave of AI hype levels out, even if it doesn't completely crash and burn, what about the long game? Can this AI chip market really keep going like this forever?
That's the billion-dollar question, right?
What if there's some other huge technological leap coming, something that none of us can even imagine yet, that just completely changes everything we thought we knew about AI?
You're thinking about those black swan events. I like it.
Right. Like, what if there's a Netflix of AI chips out there that we haven't even heard of yet?
Exactly. That's the thing about tech. It moves so fast. What's cutting edge today could be ancient history tomorrow.
Yeah, just look at Blockbuster. They thought they were untouchable.
Did.
And bam, streaming came along and changed everything.
Exactly. And the same thing could happen with AI chips. We could be on the verge of some completely new paradigm that makes everything we're talking about today completely irrelevant.
So what you're saying is, even if this isn't a bubble, even if AI lives up to the hype, there's no guarantee that the AI chip market itself is a sure bet in the long run.
Exactly. It's a risk, like any investment.
Right.
But that's what makes it so exciting.
So how do we even begin to wrap our heads around this? Where do we go from here?
Well, I think it's important to remember that we're not just talking about chips here. We're talking about the future of intelligence itself. And that has implications that go way beyond just the tech industry. This is going to affect everything.
It's like we're talking about the future of everything, but we don't even know what the future of AI looks like yet.
Exactly. And that makes it both terrifying and incredibly exciting. But I think a good place to start is to try and understand the different forces at play. Like, what are the things that are driving AI development right now? What are the different approaches people are taking? What are the potential roadblocks? And I think a good place to start with that is to go back to those dot-com days and look at what worked, what didn't, and what lessons we can learn from that whole experience.
Okay, so let's take a step back and look at that dot-com bubble again. Okay, so the dot-com bubble was this huge boom and then a massive bust. And now we're wondering if the same thing is going to happen with AI.
Right. And I think the big takeaway from the dot-com era is that hype can only take you so far.
Right.
At the end of the day, it's got to be about more than just hype.
Yeah, it's got to actually be useful.
Exactly. People need a reason to buy what you're selling.
So how do we make sure we're not just investing in hype this time around?
Yeah.
How do we separate the potential from the pipe dreams?
Well, that's the million-dollar question, right? And I don't think there's any easy answer, but I think a big part of it is being realistic about what AI can and can't do. Like, it's not magic.
Right.
It's a tool. And like any tool, it can be used for good or for bad, and it can be used effectively or ineffectively.
So we need to be smart about how we're using it, how we're
Yeah.
investing in it.
Exactly. We can't just throw money at anything with the word AI attached to it and expect it to turn to gold.
Right. Right. We've got to be more discerning than that.
Exactly. We need to be asking the tough questions, like what problem are we actually trying to solve here? Is AI really the best solution? And if so, how can we implement it in a way that's actually beneficial and sustainable?
Because otherwise, we're just setting ourselves up for another bubble.
Exactly. And nobody wants that.
So where do we go from here? What's the next step in this deep dive into AI chips and the future of intelligence?
Well, I think the first step is acknowledging that we're still in the very early stages of all of this.
Right.
AI is still in its infancy. We're just scratching the surface of what it can do. And the technology is evolving so rapidly that anything we say today could be outdated tomorrow.
It's like trying to hit a moving target.
Exactly. But
Yeah.
that's also what makes it so exciting. There's so much potential here, so much possibility. It's a really fascinating time to be following this stuff.
It really is. So for anyone listening who's feeling a little overwhelmed by all of this, what's the one thing you would tell them to take away from this conversation?
I would say, don't be afraid to ask questions. Don't be afraid to challenge the hype. And most importantly, don't be afraid to think for yourself.
Because at the end of the day, the future of AI is not something that's going to be decided by a few tech companies or a handful of investors.
It's going to be shaped by all of us.
So stay informed, stay engaged, and let's see where this journey takes us.
Couldn't have said it better myself.
That's it for this deep dive into the world of AI chips. We hope you found it insightful, and we'll catch you in the next episode.